So tactically, you would be a bit more cautious.
You would be.
Yeah. But I'm not. I've got these long-only portfolios, and I believe this. See, the last time India had a capex cycle, which I would say was like from 2002 to 2009, India massively outperformed the rest of Asia in that period. I remember it clearly. So if this capex cycle is happening, structurally, I want to remain invested in the story.
Even if they go through periods of underperformance, but eventually it'll. I mean, it's a great story.
Plus, we have the residential property story, which
you've been very bullish on.
Yeah, and we don't think there's
You did highlight that last quarter there was a bit of a slowdown, but
but that I would view all that as a pause to refresh.
Okay.
So we've got good news of if there's a weakness to the residential property story, which has been dramatic here, right? And if there's a weakness, is very much focused on what they call the high end. Which I suppose in the US, well, it depends what city you're in.
The premium end has done very well. Yeah. You're saying that perhaps sees some...
Well, what I'm saying, if you're going to criticize it, you will say it's very vulnerable because it's just the high end going up.
Okay.
But I would say, in response, well, I would have to admit that's true. I would say that's normally how property cycles work. They start with the high end and they gradually trickle down. And in that sense, rate cuts would help because if you go under 200, to use dollars, not if you go under $2,000 for a unit, you're probably going to get to levels of more rate-sensitive buyers. And so if rates go down 200 basis points here or 150 basis points, that's going to increase the number of people who can afford it.
Right. So for
I'm heard that I think I heard this week that inventory in the top 7 cities is at a 14-year low.
Yeah.
So if that's true, we can definitely keep going for another 4 years.
In terms of the cycle, in terms of real estate build-up?
Yes, because we've just entered our 4th year of an upturn.
Okay. So you're saying another 4 years?
Obviously, we take it a year as it comes, but given the fact that we had a 7-year downturn, given this multi-year inventory low, given the fact that India builds far fewer residential units today than even China, given its current problems builds, there's no reason to think why this suddenly blows up.
So tell us the sectors or places that you're most bullish on now, Chris. If somebody is trying to put fresh money to work here, what would you
put it in today. So I'm not taking out, I've got 19% in real estate stocks in my India portfolio.
Okay.
Now,
what else have you
If I was starting the portfolio today, I might be a bit nervous putting 19%. But given the fact I have 19% they've done well already, I'm not going to actually reduce them.
Okay.
But if I want to have a more cash, let's say I can't own cash, but I want it to be more tactically cautious, because I've got more short-term tactical considerations, and you want to own the stocks which are more neo-cash proxies, which I would say are like the banks or the consumer staples.
So I mean, perhaps there's a little bit of underperformance. I'm not sure. Banks have valuation comfort. Consumer staples maybe not so much.
No, but they're still, because we've got. I think we have evidence now that the rural economy is finally picking up, right? So I can see a case for adding to those tactically.
But if you were looking at slightly beyond the very near term?
Looking beyond the near term, I'm sticking with my current portfolio.
Okay.
So the issue with
which is 19% real estate, what else?
No, it's big in capex plays and energy.
Okay.
And if any real correction in those areas, I'd be looking to add.
Okay.
Because I'm quite heavy in the banks, but the whole infrastructure story here in India, the energy story, these seem to be at the center of the action, at the center of the capex cycle.
Sure.
It's just very positive for an economy if you have both a residential property upturn and a private sector capex cycle going on. So the way I look at it conceptually is that the government in the last 10 years has spent a huge amount at the central government level building capex, which has been the big driver of the fiscal deficit as opposed to transfer payments.
Sure.
So that's been the enabling factor for the economy, which should give the private sector confidence to invest. And we are now, in the last year, seeing that actually happening.
Absolutely.
Yes. So whereas a year ago, talking to people in the government, they were saying why isn't the private sector investing? So I was saying, don't worry, the private sector capex stocks are going up.
Yeah.
But obviously, if you're a government official, the stocks going up is not. You don't trust the evidence.
Absolutely. Chris, just one last point. You were cautious, right? You're telling me you're a bit cautious. We've got another round of elections, state elections coming up. Are they going to be important? Have you heard that as feedback from investors? They're watching it closely.
On the big stage. Obviously, we're seeing handouts, right?
Right. Across states, I mean.
Yes. So that's obviously. I mean, that's another reason to maybe add to consumer staples. Tactically, long term, that's not so great, but that just means maybe the incumbent has a chance of winning where everybody thought they were going to lose.
But would it make a difference? I mean, even if the ruling party were not so much...
that will create some negative noise.
Because, I mean, some argue that the general elections barely caused a bump, so why should this matter?
Well, I kind of agree with that.
You do?
My message, what I picked up talking to government-related people this week is rather than passing lots of laws, the bigger focus seems to be on doing away with a lot of these regulations, which are a legacy of the what they call the license Raj. I think there's clearly a case for a bonfire of regulations to promote business.